once the leading light of Latin America, low oil prices and state overspending have left the economy shattered. Now it's heading for default on its debts. I don't think the market's in any doubt that it will default, they just don't know when, says Paul Wetterwald, chief economist of Indosuez Wealth Management. It is impossible to go on like this. It is even worse than the Greek situation. Venezuela was the wealthiest country in South America with oil reserves among the largest in the world. It's a place with enormous potential, says the World Bank. But it relies on oil for close to 100% of its export revenue, and the slumping price of black gold has hit the economy, and ordinary people, hard. There are shortages of basics including food, toilet paper and soap, while inflation is estimated to be between 150 to 0%, sending the prices of goods that are available sky high. Condoms are selling for $20 each. McDonald's hit the headlines when it removed French fries from the menu after a potato shortage, but now they're back. A large serving costs $133. Venezuelans plan their day around water and power shortages, which have been worsened by the El Niño weather pattern since a lack of rain is hindering power production from its mostly hydroelectric plants. At night, it's one of the most violent countries in the world. The economy's in its worst state since 1940, according to analysis from Capital Economics. But much of what's going on is guesswork, since the government gave up on releasing official inflation and GDP data at the end of 2014, probably because there's no point confirming what anyone can see is a dire situation. How have things gone so wrong? Many experts place the blame squarely on poor governance. Venezuela spends most of its cash on quite egregious social programs because poverty levels are so high, explains Ducia Youngson of FinCap. Venezuela's black gold is easy to reach and costs $36 a barrel to take out of the ground. With oil prices hovering around the £31 mark, things shouldn't be so bad. But the country needs oil prices between $100 to $160 a barrel to break even on its spending plans. The main point is there's a huge public deficit. I think they made a choice to spend on social programs, and as long as the oil price was high, it was okay, says Wetterwald. There's a range of other issues, including that oil production facilities have not been properly maintained, so output is lower than it could be. Doing business in Venezuela is tough, since the culture is ridden with corruption. The government, led by Nicolas Maduro, has taken action. Last week it devalued the main exchange rate, known as the CNSX. It's used for importing essentials including food and medicine, and was weakened to BF10/$, down from BF6.3/$. It also raised the price of gasoline by 6,000%, another burden for the country's poor, although petrol is still the cheapest in the world. But these measures are simply too little too late, and fall chronically short of what is needed, says Edward Glossop of Capital Economics. After almost 2 years of economic crisis and no reforms, these measures are welcome. But they are nowhere near enough to alleviate the escalating crisis, he says. The biggest immediate concern is the lack of dollars. Although the government says the Bolivar-dollar exchange rate is BF10/$, there's a thriving black market where dollars are bought for BF1000/$. That shows how dollars are in exceedingly short supply and is a decent measure of how much the Bolivar is really worth. In the meantime, Venezuela is receiving loans from China and Russia, which should help it avoid default this year, but they don't come for free. The fiscal side of things is getting rather complicated, and whether they need to restructure the debt remains to be seen, but there's a chance they might have to, explains Sergey Strigo of Amonti. Venezuela, the world's worst performing economy, appoints second finance minister in a month. Nothing says stability like burning through two finance ministers in a month. And so it is of course hugely surprising that Venezuela, the country whose economy is in its worst state since 1940 and which recently topped the global misery index for the third year in a row, has done exactly that. President Nicolas Maduro, the leader who has been locking up businessmen for conspiring to create long queues to undermine his government, has just appointed Miguel Perez as vice president for the economy, becoming the fourth person to run Venezuela's finances in just 2 years. His predecessor, 39-year-old sociology professor Luis Salas, was only brought in early last month. In an evening television address to the nation, President Maduro blamed Salas's departure on unspecified family reasons. But the change has prompted further criticisms of Maduro's erratic leadership. Maduro is adrift, opposition lawmaker and economist Jose Guerra tweeted. Salas lasted 30 days. This is the government in chaos. Venezuela's new economy czar will be greeted by a bulging in tray. The country's economy continues to be buffeted by plunging global oil prices, with the World Bank forecasting that it will contract by 4.8% in 2016. Meanwhile, the IMF predicts inflation could hit as much as 720% this year. Official government exchange rates put $1 at around 6 BDF, but black market exchange rates could be as high as 1,000 VDF to the dollar, according to website Dollar Today. Food and medicine are becoming increasingly scarce, with long queues outside supermarkets a regular sight in the country's capital, Caracas. Venezuela has been involved in discussions this week with Saudi Arabia, Russia and Qatar in a bid to freeze global oil output and shore up crude prices. Venezuela's socialists are staring at defeat ahead of this weekend's election. People in Venezuela were asked, earlier this year, to name any very big problems in their country. 84% cited a shortage of basic goods. 82% said crime. 3/4 referred to health care, which is little surprise given that Venezuela's hospitals are in crisis. Even less surprising is the fact that, topping the list, 92% cited rising prices. Inflation has soared to levels so elevated that it's impossible to accurately measure. Estimates range from 100% to over 800% per annum. The survey data was published yesterday by the excellent Pew Research Center ahead of this weekend's parliamentary elections. It is humbling to contrast the figures, which are so high and refer to such serious concerns, with similar polls conducted in the UK. The recent survey by Ipsos found that no single issue was named as important by even half of Britons. Topping the list, somewhat absurdly, was immigration, which 49% of respondents cited as an important issue. If we consider our biggest problem to be the fact that people want to move here, things can't be too bad. On the contrary, polls in Venezuela reveal a frustrated, desperate and divided public. Astonishingly, 43% of those polled earlier in April/May this year said the country should still follow the policies of former President Hugo Chavez. Yet Chavez's successor, President Nicolas Maduro, who manages to be both farcical and disturbingly oppressive, jailing his political opponents while blaming companies like Heinz for food shortages, deservedly endures abysmal poll ratings. 68% of Venezuelans have an unfavorable opinion of the former deputy to Chavez. As far as this weekend's concerned, The most important figures simply show the gap between Maduro's ruling Socialist Party and the Democratic Unity opposition, and fortunately, the latter is seeing double-digit leads in the polls. If an opposition victory is recorded, we must hope it is not followed by the kind of strong-arm tactics and chaos that have accompanied the socialist 16-year rule. Venezuelan economy in worst state since 1940. Capital Economics. The lack of official economic data coming out of Venezuela has not stopped experts at Capital Economics from trying to quantify the crisis. The Capital Economics Venezuelan GDP tracker has found the collapse in oil price has over the last 12 months has meant output is now contracting by close to 10% year-on-year. The economy is now in the midst of its worst recession in over 70 years. Once Latin America's most wealthy country, Venezuela hasn't published gross domestic product figures since the third quarter of last year, and no inflation numbers since December 2014. Last year economic wags at NOMER released a cobbled-together Venezuela screwed-up index the SI described as a sort of revenue-cost ratio. Think of it as the number of barrels of oil a minimum wage can buy, NOMER explained. It was reported last week the country was buying up 12 new fighter jets from Russia for a staggering £300 m. While the current crisis is largely down to the plummet in oil price, Capital Economics' Edward Glossop thinks that the country has been unable to weather the falling in the way of exporters in the Gulf due to years of macroeconomic mismanagement. Venezuelan President Nicolas Maduro has threatened to arrest senior members of the food group Heinz for sabotaging the national economy. The country's leader, who earlier this year arrested a number of businessmen for conspiring to create long queues outside their shops, went on TV last night to warn that an inspection would be carried out against the bourgeois parasites who work at Heinz. "Enough of this bourgeoisie," he said. "They ran out of time, bourgeois parasites." He also criticized the company managers for holding back products to drive up demand. "I know the manager is conspiring to irritate the people," he added. "It must stop immediately. Enough already have the products, but they close the doors to people, to make them suffer under the sun." The country is struggling under severe economic challenges. In August, it was estimated that inflation had soared to an eye-watering 808%, the highest in the world, though the official rate is a less headline-grabbing 6.35%. The discrepancy is down to black market goods. UK exports. Venezuela is the riskiest place in the world to do business, while Norway is the most resilient. Expanding abroad is a big step for any business, and that's without added risks from geopolitical instability and dodgy dealers, not to mention natural hazards. Now a new resilience index by property insurer FM Global has identified the riskiest places in the world to do business, taking into account factors ranging from corruption, infrastructure and the quality of the local supply chain to countries' dependence on oil. And while the UK came 28th for the third year running, although we have low levels of corruption and a reliable supply chain, the risk of terrorism knocks us down. Ireland came in at number 4, thanks to its low exposure to natural hazards and the fruits of its austerity and fiscal regimes. Norway and Switzerland were ranked first and second, followed by the Netherlands. And although the decision to host the World Cup in Qatar is controversial, the country was the only Middle Eastern nation to be included in the top 10, thanks to its macroeconomic stability, efficient goods and labor markets and high degree of security. At the bottom of the 130-strong list was Venezuela, which has a challenging mix of an unstable economy, high inflation and public debt, and malfunctioning markets, the report said. Meanwhile, Ukraine and Kazakhstan were the biggest fallers, dropping 31 places thanks to, respectively, war and poor commitment to natural hazard risk management. Thailand fell 20 places to 82nd, pushed down by the declining quality of its infrastructure and low-quality local suppliers, and ordinary people, hard. There are shortages of basics including food, toilet paper and soap, while inflation is estimated to be between 150 to 0%, sending the prices of goods that are available sky high. Condoms are selling for $20 each. McDonald's hit the headlines when it removed French fries from the menu after a potato shortage, but now they're back. A large serving costs $133. Venezuelans plan their day around water and power shortages, which have been worsened by the El Niño weather pattern since a lack of rain is hindering power production from its mostly hydroelectric plants. At night, it's one of the most violent countries in the world. The economy's in its worst state since 1940, according to analysis from Capital Economics. But much of what's going on is guesswork, since the government gave up on releasing official inflation. Once the leading light of Latin America, low oil prices and state overspending have left the economy shattered. Now it's heading for default on its debts. I don't think the market's in any doubt that it will default, they just don't know when. And GDP data at the end of 2014, probably because there's no point confirming what anyone can see is a dire situation. How have things gone so wrong? Many experts place the blame squarely on poor governance. Venezuela spends most of its cash on quite egregious social programs because poverty levels are so high, explains Ducey Youngson of FinCap. Venezuela's black gold is easy to reach and cost an, says Paul Wetterwald, chief economist of Indosuez Wealth Management. It is impossible to go on like this. It is even worse than the Greek situation. Venezuela was the wealthiest country in South America with oil reserves among the largest in the world. It's a place with enormous potential, says the World Bank. But it relies on oil for close to 100% of its export revenue, and the slumping price of black gold has hit the economy